let's look at 3 country ETFs with low PE and juicy dividends. First off, read this disclaimer carefully. Let's quickly look at the newsletter, look at the performance. You can see that there's some interesting moves here in the sectors. And the megatrends still quite very significantly outperforming the S&P 500. Okay, let's now start off with the benchmark, which is the S&P 500, the American stock market ETF. So the PE here for the S&P is 24 and the dividend yield is 1.6. The first contender is Singapore. So here you can see the PE is 10.7, so it's way cheaper. And you look at the dividend is 4.7%, which is very juicy compared to 1.6. So on those 2 metrics, it definitely is looking quite interesting. If you look here at the seasonality, this is the percentage of months in which the Singaporean stock market ETF outperformed the S&P 500. You can see that in October, 53% of the time it outperforms the S&P 500. Not any kind of strong statistics here, but usually there is some outperformance. You can see here that December especially is strong for Singapore, so that's interesting. So let's now look at the charts. Here is the EWS, weekly data points. So here you can see a lot of history. You can see that after the financial crisis, it did not actually break out to a new all-time high. It's been in an overall downtrend. That's something we can quite clearly see. And during this pandemic plunge, it did actually go back to some of the low levels here of the housing bubble, the global, bear market. So it's interesting. The housing bubble in the US, that is, of course. You can see here, when we look at, the bounce from the low here, there is some bullish action for sure, but it's way more modest than what we have seen in, certainly the Nasdaq and also, the S&P 500. This is very cautious. Cautious, I guess, is the term that would fit this. We are, however, finding support here at these moving averages. That's interesting. The accumulation distribution line, it is not really showing us any dramatic increase here in volume. I would like to see it a bit higher. Yeah, let's look at the daily data points. Looking at the dailies here, we do find support here at the 100-day moving average, so there is support. You could make the case that there is a bit of a rounding-ish bottom formation, even though it is very cautious. On the dailies here, you can see actually that the accumulation distribution line is corroborating this rally quite significantly, actually. See that we are higher here than we've been in quite some time, so that's quite constructive. That shows us that there are some bigger players building a position. Next on, we look at Colombia. So this is the iCall, is the ticker, iShares MSCI Colombia ETF. So 8.7 PE, way cheaper than the S&P 500, and 3.7% dividend, which is not as good as Singapore, but much better than the S&P 500. Looking at iCall against the S&P 500 seasonality, you can see that this is, generally speaking, it usually underperforms the S&P 500, except for December, that for some reason is very strong. So let's look at iCall. Looking at weekly data points, it's quite clear that we are in a downtrend. But that also has been helping the valuations here. You can see that we do have some support levels here. And actually the comeback after the pandemic looks extremely similar to the chart that we saw with Singapore. So it's very interesting to see that kind of behavior. And there's actually minus 28% correlation negative with the S&P 500. So they are uncorrelated, and that's something that the more sophisticated investors really like to see. Because, that is very beneficial when building, market-neutral portfolios. Looking here at the daily data points, we see something rather similar to what we saw here with Singapore. Colombia is, of course, a very different country. We do have these support levels. We have actually broken above all the support levels here, the moving averages. So this looks more constructive. We are potentially becoming, I mean, we are edging closer towards overbought levels on the RSI. It generally speaking doesn't like to become overbought, so that's something to be a bit cautious about. Due to the very limited volume for this ETF, you can see that the accumulation distribution line can very quickly become distorted. So it looks very messy, but there has been, objectively, if you look at these massive volume bars, there's been some huge buyers here. So something is afoot, okay? Could be some sophisticated investors. Okay, so that is ICAL. The next one on the list is actually now we're going to Russia. So this is the EUROS iShares MSCI Russia ETF. Let's look at dividend and valuation. So the PE is 6.46. That's really low PE. I mean, obviously much cheaper than the 24 S&P. The dividend yield is very juicy here. Here we have a whopping 8% dividend. So as far as the other ones we've looked at ICAL. EUROS is definitively better than ICAL there, and also Singapore. So EUROS, as far as dividend and valuation, it looks really, really promising. Looking at the seasonality, you can see that October and November are usually some of the weaker months here for the Russia ETF vis-a-vis the S&P 500, but December is strong. So now let's look at EUROS. ERUS is the ticker. Well, let's look at the weekly data points first. We get, the bigger picture. You could certainly make the case that this is a very long-term rounding bottom. So it's very jagged, but this is basically like a battle between the bulls and the bears. You have this contention. Some would argue that this pullback, it could be a sign of what you call a cup and handle pattern. So let's just paint, let's use the brush here. Like that, so here we have like a rounding bottom is like this, while a cup and handle it becomes like this. This handle is a bit deep, so I'm not sure I would want to agree that say that this is a cup and handle pattern, but you could make that case. We are above the 200-week moving average. It has gone from negative to positive. We do have resistance here at the 50-week, so technically it looks interesting. There is some bullish sentiment going on here, though it is measured very careful, way more careful than the S&P 500, which is just roaring. And if we look at the correlations, there's a minus 63% negative correlation here with the S&P 500. Nope, it is not negative. It is actually positive. Yes, it is positive. It's just very difficult to tell. It's like squished down there. Okay, looking here at the daily data points, we do have some tepid support here from the 50-day moving average. We have resistance from the 200-day. Being able to break above the 200-day and stay above it, that would be like a clear, okay, something is a good sign. To the bullish side of the battle. The accumulation distribution line is looking quite constructive. I mean, we haven't seen these highs. We need to go way back here in 2018 to see similarly high levels. So there are definitively buyers here stepping in. So all in all, it looks constructive. Okay. So now we have seen some alternatives, okay, to the S&P 500 that have a much lower PE and very juicy dividend. I mean, the Russia ETF definitively has a very juicy dividend, and these are some of the things you should think about when investing. Is that where is there value? Because the big benefit of value and dividend is that it gives you more of a cushion. When you have something like the S&P 500 now, and you have also the Nasdaq, you gotta ask yourself the question: who is the next buyers to step in to push up the market even further? There is certainly risk in these kinds of very elevated markets. Whatever you do, of course, you don't fight the trend, and may the trend be with you.